Hello everyone, happy Sunday. This is Simon again with AvaTrade, and we're back to our weekly trading plan webinar. I want to welcome all of you back, and of course, a special welcoming for the new people. And for those of you that are new at our webinar, just a few words what we do here so you don't get lost. It's pretty much says in the title. What we do here, we actually make a plan for the week, create a structure, look into some fundamental aspects of the market, and then move into the charts, taking a look at specific instruments and creating a plan, certain levels and certain ideas on trading. That's what we do. And a few words about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. My experience as of now is over 22 years. I was a proprietary trader back in New York in a few prop firms. After that, I became a mentor, educator for other traders, and currently I'm working with AvaTrade, really enjoying helping other customers become better traders. And this is the structure, pretty much what we do. We speak about indices, stocks, commodities, FX. Could be in a different order, but we're covering these markets. And just want to share with you important for you for the education. You get in touch with us or keep in touch with us with the Telegram, Twitter, and YouTube. I always talk more about YouTube, as YouTube has a lot of content, a lot of tutorials, a lot of educational material that is available for you. And of course, the risk warning, as usual. You can find the full statement on the risk warning. The idea is really that what we do here, it's not telling you what to do, what to trade. It's purely educational, and you need to make your own decisions, of course, as fast trading. Okay, so the key points, we start with the big picture. And as we spoke about last week, the NFP was on the horizon. It did come out on Friday. Now, big surprise. We were expecting 250 jobs added. It was doubled, more than that. 528 jobs were added. Not only that, also unemployment rate dropped to 3.5 from 3.6. And we'll take a look at the charts at the moment, what market did, how it reacted to it. But it wasn't looking good, and that's obvious because the Feds, as I always say, they pay attention to a few things, three things actually: inflation, labor situation, and the economic growth. So on economic growth, we did have two consecutive quarters on falling GDP, and inflation we're going to have this week. It's coming out, and of course, the employment data is very, very important. They were hoping that it's going to continue shrinking, and it didn't. So market reacted to it in a negative way. Why? Because it's going to be harder for the Feds to deal with inflation. And what happened right after that, this spike on, as they say, the chances, I don't know how they calculated it, but they said that the chances of 0.75 interest rate hike September, right after the announcement, rose to 65%, and it was 28% chance before the announcement. So market reacted, of course, in that way. Okay, so again, on this week, we have, this is the economic calendar, and it's important that I mention to you, if you only see this a few announcements for the week, that's not true. I just take the high impact ones. As you could see, there's more announcements, and I suggest that you choose whatever announcements and reports are relevant to your trading, to the markets, and things that you work with. So on Wednesday, we have CPI numbers from China, CPI numbers from Germany, and this is very important, CPI numbers from US that the Feds are really, really looking for. So that's on Wednesday. Friday, GDP we have from UK, and this is also important, the Consumer Sentiment Index of Michigan. So that's as far as economic calendar. Okay, and let's move now to the trading platform. This is MT4. And as I said, I just want to show you how market reacted to it. I take S&Ps. And again, for those of you new traders or inexperienced traders, S&Ps, the reason I'm using in general as S&Ps, as traders around the world are using S&P 500 as a general measure what the global markets are doing. It's a collection of 500 stocks. They do business all over the world, different industries, and it's a good balance of seeing or understanding what's happening. So I just take 30-minute chart, and this is the announcement. As you could see, 12:30 GMT, the announcement of NFPs came out. Immediately, market dropped. And just to give you the numbers, we were at the high of 41.59. We dropped about 56 points, 55, 56 points dropped. Now, after that, it became interesting. We were holding, that was the first 30 minutes. The second 30 minutes, we were flat at the bottom. And then they decided to take the market higher. We almost recovered. Then we dropped again. Then we tried to recover again. Then we dropped, made pretty much, we made 1, 2 high lows, and that was kind of encouraging, but still we didn't get back to the beginning of this move. We're sitting here now. Again, what's this week is going to be? It's going to rely or depends a lot on inflation. If inflation is higher than it's expected, or maybe I'm just speculating here, if it's higher than expected, that will mean that next month interest rate could be 0.75, could be even surprise of 1%. That's what was one of the expectations for this last report that we had of FOMC. So that's really, really important what the inflation data will come. And of course, over the weekend, the traders, analysts, investors, and funds, and everybody, they will try to digest and read what analysts are saying and so on. So it's going to be an interesting week. And in general, the averages, I just give you the number that I just took of the websites. The Dow Jones gained 0.2% on the day, but on the week it lost 0.1%. Okay, let's take a look at Dow Jones. So it was a daily gain. As you can see, we're closing the green, but in the week it was a low. Now on S&Ps, we just looked at S&Ps. S&Ps went down 0.2%, but on the week we're up 0.4%. And Nasdaq for the week did great. It fell, even though it fell 0.5% on Friday, but for the week it still was up nicely, 2.15%. So again, how we start this week is going to be interesting. We'll be looking at the stocks at the moment, also see how individual stocks reacted to that as well. So again, U.S. indices, they're very in interesting spot. S&P 500 on the weekly chart, we are playing with the 100 moving average. If you take a look at the daily chart, we are facing a major resistance here around 41.50. Nasdaq is also trying to get higher, but even if we do, we have super major resistance at 13.5 around this area here. And Dow Jones also is kind of stuck at these levels here, cannot push any higher. And as you could see, they're all hitting the 100 moving average on the weekly chart. Hard to break. And of course, with this super high data and increased chance of Feds doing more aggressive interest rate increases, the market's going to have a hard time going higher. Now, on the big picture, some investors saying, okay, this could be a next rally. Most of the analysts are saying that we are still to see continuation to the downside in the bear market, and they're saying one of the main reasons that they didn't see any capitulation on the June lows. That was a move down, but there was not capitulation. Then when people just say I'm out and this on the huge volumes, a huge sell-off, it didn't happen. And usually that's a big sign of a reversal when the bear market is over and we're going higher. So in general, the sentiment in the market that we are continuing lower until of course the Feds are done increasing and things get into a normal thing with inflation and so on. So that's as far as US indices. If you take a look at Europeans, we pretty much didn't do anything. We're at the same levels and we are facing resistance on the DAX. FTSE, the same thing. We are trying to break through the recent highs. We can't. So it looks like we're facing on all the markets, we're facing resistance at the current levels. And I mentioned to you the Nifty, and I came to this resistance here, and in the last 2 days it was selling. So another reason why it's not just the global sell-off on the markets that we're facing in a way, potentially important to say, but also they increased the interest rate in India, which is normally not that great for the companies. As you could see, the 2 days in red. Thursday was a big sell-off, but we came right back and we're here. So I am paying attention to Nifty as it did have a nice move higher to these levels of resistance. So let's move to individual stocks, and important to see a few names. Now Uber, as you remember, we mentioned Uber on good results, and the stock is really running up. There was a lot of accumulation here, and it's still moving. At some point profit taking will be taking place, and actually the levels from which we fell, it's right there, we actually approaching around $33. The high on Friday was 32.60, and that would be also a 200 moving average. So Uber will be watching on a potential ceiling around this level and see what's next. Now Intel, after the recent sell-off and the bad news, nothing is happening there. Apple, as you could see, most of the stocks, I'll explain this candle, they open with the gap down because the numbers, the NFPs came 30 minutes, not the 30 minutes, an hour before the market opened. So the stocks already opened with a gap, but they recovered nicely, especially Apple, as you could see. Apple recovered nicely, and currently we are facing a resistance on Apple around 166 and a quarter. As you could see, we dropped from here. We retested, confirmed this as a resistance. Following day, we couldn't break through, and this remains a resistance there. Amazon had a nice run with good news, and we'll see what's next. Again, if the market comes in, most of the stocks will do as well. Now, the chart didn't adjust here yet for the split. So on Google, we are actually, as similar to other stocks, we're facing the levels of resistance here. For Google, it's between 116 and 119. We'll be seeing what's next. Now, Walmart, I paid attention to Walmart. Very interesting price action. This was a drop on the bad news, and then we recovered really fast. They were all over the news that the family, who's the owner of a major owner of the Walmart, they lost 13 something billion of this move. And we came right back, and now in the past few days we're down to retest 50 moving average. It's hard to say anything, but for people that are trying to catch quick moves, this is very interesting because we kind of established here a nice channel between 120 and 130, a $10 range. So it could be interesting to see and maybe try to catch some moves over here. But again, for the investors, it's a little bit hard. Imagine you were a seller here, and then you said, okay, I'm going to buy here. We'll come right back. And it depends what your style of trading is. And of course, it will be depending what the market is doing. Now, Facebook is sitting low since the last announcement, very disappointing. They're trying to break through 50 moving average to the upside, having a hard time. So we're sitting around this 166 level. Tesla highlights on the Tesla. We did sell off on Friday. It was a gap and lower. Maybe somebody knows something. Maybe there's some developments, because when I look at Twitter, it's ongoing issue. Twitter went up on the same day. So maybe there's some unknown details on the court on the issue. Just to remind you, I assume sometimes that everybody knows, and I'm sure a lot of people know, but there's legal issues between Twitter and Tesla. As you know, Elon Musk, back, I believe it was in April, he announced that he's buying Twitter for $44 billion. That would be around $54 per share. This was the move, actually. Yes, beginning of April. And then he changed his mind, and now Twitter took Elon Musk to court, and we'll see what will be happening there. But on Tesla itself, it was a meeting for shareholders, and they agreed to 3-for-1 split. And I just checked the date. The split will happen after the market on 24th of August. So again, what will happen if you are holding Tesla? You will get 3 shares of Tesla for each share that you're holding. Total holding as far as equity will remain the same, and that's pretty much what happens at the split. Generally, split is good for the company because it will be cheaper, it will be more attractive for more traders and investors to come in. So that's as far as Tesla. And one more stock I'm going to take a look at is AT&T. If you remember, I mentioned it since they spin off the media and just remained the telecom. The stock was doing good. A lot of good future was predicted from traders, and then the earnings came. I assume not so great. The stock sold out, and we are sitting here. So the buyers or investors are trying to come in, probably gonna see if we're coming back into this channel around 19, 18, 83, 19. If we're entering this channel again, this could be an entry with maybe 50 cents stop or risk around these levels and potential move to the high. Until then, it looks super weak. It didn't bounce at all since this sell-off. So that's as far as stocks. We have this week, by the way, about 77% of the companies reported as of, I'll give you the exact numbers. As of Friday, 432 companies out of 500 of S&Ps reported already, and 77% reported better than expected profits, but they reduced the future estimate. So it's not so great, and it's kind of a mixed thing. So this week we have a few companies reporting. AIG, Tyson Foods, Coinbase is reporting, very controversial these days. Cisco is reporting, Disney is reporting, Fox Corp reporting, Cardinal Health, and a few others. So again, if you do trade stocks and you looking at the earnings, it's easy. You can just Google the earnings, and it's important to know when they're coming. Sometimes they come before the trading session, sometimes after. It's also important if you want to be aware and prepared for trading certain instruments. Okay, so let's move to commodities. And we had a little bit of a bounce on Friday on crude oil. Now, crude oil, it's really suffering here. And if you remember, I mentioned that we've been holding this level around 94, 93 and a half, but we broke through it and it just opened brand new territory for possible continuation to the downside. OPEC announced they're increasing the production. China is not doing that great, and there are more potential issues now. There's also issue with China and Taiwan since Pelosi's visit there. So it's just adding more pressure to China's economy, it looks like it, or the regional economy there. So between those things, the oil is continuing to the downside. and let's see what happens next. Now, technically speaking, on the weekly chart, we broke the 50-day moving average, and we could assume that we might slide to around 85 and retest this previous level here. And we'll be watching for these numbers in the upcoming week. Natural gas, it's sitting around 8. It's hard to say anything. It looks like Russia is cutting gas or natural gas supply to more countries, or it's on their calendar or their agenda. It's hard to say what's going to be. We had a nice move, recent move. Now uh, we went to the downside, and we're sitting around these levels around 8. It's more geopolitical than anything, and it's very hard to say. And as far as the levels, I mean, the smartest thing, again, not to predict, but to be prepared, is if you take this large candle here that was on the 3rd of August, so the bottom of it could be at least intermediate support, and the top is a resistance. That could be the smartest thing, trying to see the levels. Otherwise, it's very hard to say where is it going to go, because as you could see, sometimes you see ranges that breaking all the levels. So there's no specific levels that you can stick to. Now, wheat and corn, again, geopolitically speaking, the few boats that left Ukraine, the first one went actually with corn, and with the help of UN and Turkey as negotiators. I think the boat went to Turkey and then went to Libya. I believe, I'm not sure which country, but it looks like things are getting a little bit better. And if you take a look at the corn in the last few days, bounced off this level that's been holding around 582. Wheat had some actions as well. We've been holding this level here around 753. On Thursday, we had a nice move higher. Friday, we retraced about 50% of that. So we need to get out of 800. That's what I mentioned last week. We need to stay higher than 800 for it potentially to go higher. Now, here it's very interesting. If you could see, the 50 moving average is about to cross the 200 moving average. That's bearish. So again, as you know, the indicators are lagging indicators. Maybe it's already indicating this move. It's hard to say, but the big shot analysts are paying attention to it. So I wouldn't be surprised if they announce it next week. Bearish signal on the wheat, but I think it already played out. So we do have a support around 573. We have closest resistance 800. So we're sitting around a $50 range. It is building for something. As you could see here, it built for a long time and then we shoot up. Of course, that's when the war started. But the buildup is starting again, and it's been going on now since we came back to this channel in the mid-July. Okay, so it's almost a month we're playing on these levels. Something's going to happen. Also, the opposite could happen. We can break down and go searching for next support, also possible. But again, we'll be seeing what's happening. So that's wheat and corn. And let's take a look at gold. Gold did really great day before the announcement. The announcement is sold out. And I just want to show you really quick the slide that I prepared, and I sometimes speak about it. This is the 10-year bonds, the yields. So the level here that I mentioned around 2.72, we've been holding around it. And then when the announcement came with the US dollar, we'll be watching in a moment, US dollar went up, the yields went up as well, and the gold went down. So gold is really sensitive to what's happening in these yields. You can research for yourself more. I don't want to go deep into it and confuse you, but this is the indication that the Feds are looking for, and the traders, the bond traders and investors are looking for as a number. So just wanted to show it to you. So gold, again, we could be back to 760, retesting it. We're playing now with the 50 moving average on gold on daily chart. And copper. Copper, as I mentioned to you, it's very sensitive to China, as China is really a big user of copper. And now with the issues there with developers and real estate and the building and everything else, not to say financial issues building up, copper has been really, really selling. But now, recently, we tried to bounce out of it. And as you could see, that was the end of July. We moved as high as 3.59. Then we pull back as a normal price action for the profit taking. So it could be that we're going to have another attempt breaking through it. As you could see, this is 1 to a third or a triple top. We could break through it, and then we're going to have to face the 50 moving average, or the opposite. We can just slide right back and start again playing with this support at 330. But very sensitive here on copper. We should be watching what's happening in China and in the economy in general. So that's I think that's it with commodities, and let's move to the Forex world, and we'll start with dollar index. And I want to show you the announcement. This is the announcement. Dollar jumped from 105.78, pretty much a dollar, full dollar. Then we played around, and we closed at 106.41. This is the daily chart, and we are in this range between 105.5 and 106.5. Again, just to remind you, we were at 109 recently. That was a month ago, a little bit less than that. So the moment we come out of this 106.50 and start building new support, we might continue higher, especially on the horizon. We have another interest rate, and based again on the last employment data, there's a increased chance of another 0.75 increase. And again, to remind you, on Wednesday, the CPI data is going to be very crucial. So dollar went higher. That means very simple. We had other currencies went lower. It's no brainer. And we spoke about euro that's really having a hard time. Even when the dollar got weak, euro couldn't get out of this resistance 102.61, and that's obviously just went down. Now pound, super weak. I really don't know. Maybe they know, of course, they know more than I do, but they increased this past week interest rate by 0.5 percentage, and pound really didn't react positively to it. And of course, on Friday with the data, it went lower. So we are Friday we retested again 0.20. That's what we couldn't break it to the upside. Now we actually seeing if that's a steady or strong support at 1.2. Let's see what's next. A New Zealand dollar also sell off, and of course yen. After this nice move, we came to 130 almost, right? The low here was 130.39. Super nice move, 900 pips, exactly 900 pips from the recent top, and we bounced of it. And of course on Friday yen got weak with the yields up and dollar higher. So let's see how we act at these levels here. This is we in between 150 moving average, and we are facing a resistance around 135.50. So I'm watching it every day. I know a lot of traders are watching it as it became a lot of volatility in this pair, which creates a nice environment for traders. That's it with Forex. Let's wrap it up with our cryptos, and crypto reacted to the market move. Bitcoin came back to the base at 22.5, retesting it. If we're holding this support, I don't want to guess. It's very hard to predict anything with cryptos. And like I said, we are now in a new range between 22.5 and 25.5. We are closer to the bottom, so the buyers are coming in. The moment we reach 25.5, probably the sellers are going to come in, and that's the game. And on Ethereum, it looks a little bit stronger here, but we are also in the range between 1580 and 1760. In order for it to really show some strength or or involve more buyers to come in, we need to be closing about this recent high, which was 1780. So I would say 1800 would attract more. Now you could see and make speculations that this is a cup and holder, the formation that some traders are looking for. It's, as some people say, you can find whatever you're looking for. So again, we are about 100 moving average though, and on both of them. No, sorry, just on Ethereum. That's what I said. Ethereum is much stronger. Bitcoin is in between 50 and 100, and Ethereum just closed about. So that's a nice positive sign. And that's it pretty much with our webinar today. And I want to thank everyone for coming. Please, if you're watching it on YouTube, put the likes. It's good to see people liking it because you see a lot of viewers, not so many likes, so it's a little confusing. Of course, subscribe to the channel and click on that bell so you'll be notified for the new things. And before I wish everyone a great week, just to put highlights of what we spoke about. We have NFPs that affected the market in a negative way, of course. And we have on the horizon, the highlights of this coming week is going to be the CPI data. So if that also gets more pressure, that means the inflation, if we don't see any slowing of the inflation and even higher than expected, that would increase the chances of the Feds having a higher hikes for the interest rate, and that would really cause the market going into a selling mode. And that's it. I want to wish everyone a great weekend. Get some energy, get some power. Enjoy the summer, of course. We still have a little bit left of the summer, the whole August. And have a successful week. Stay safe, stay healthy. All the best. Take care.